So we're now recording, so welcome along everybody. As I said, welcome to our ADSY revision session. Today we're going to be taking a look, starting with task 3 and then having a look at task 4 as well. So as you're already familiar with at this stage, a portion, or a pretty substantial portion in truth, of this assessment relates to the 3 core units: advanced bookkeeping, final accounts prep, and of course costings alongside that. Now, last week we looked at more the advanced bookkeeping side of things, didn't we? We had a bit of an intro to sort of the ethical implications in task 1, and then we also started to do a bit of work on depreciation, net present values, so just advanced bookkeeping style topics. So starting with task 3, looks like we're going to be doing a bit of costings now, doesn't it? Some people will be delighted with that. Some people will be rolling their eyes, I'm sure. But let's have a look at what we've got here and start to work through this. So in this question, we're working for Gordon Limited, and we've been told that we have the following budgeted costs per unit for GOR 001. So we've just got a handful of different things here. We can see that we've got variable costs such as materials, labour, even some variable overheads. We've also got a fixed overhead as well. So all in all, it's coming to a total cost of £140. We're then given some additional information. We're saying, okay, the product has a selling price of £160 per unit, and then the budgeted sales volume is 3,000 units, and we also have budgeted fixed overheads of £60,000. Lots of information to take in here, isn't there? And as you can start to see, what we're really going to be focusing on in a question like this is short-term decision making. So again, we can't say for certain what's going to come up in your synoptic assessments. The costing related stuff, they do like to use short-term decision making. They like to see how you can deal with things like contribution, break-even analysis, and limiting factors. So what was very large parts of the costings exam itself generally tend to translate through. They prefer short-term over long-term in these sorts of questions, but that's not to say something of that ilk might come up. So first of all, we're saying, can we calculate the break-even volume in units for this product? So this is just where we need to just backtrack to costings, revisit, refresh our understanding of the formulas that we need to perform various break-even analysis. So the break-even point, or break-even volume as it's referred to here, is essentially the point where my revenue covers my costs. It's where I've broken even, as the name suggests. I haven't made a profit, but I've covered my costs. I'm not making a loss. So the formula for this is as follows. It's a short-term decision making. We're using marginal costing. I need to cover my fixed overheads. So the formula is fixed cost divided by my unit contribution. Sounds straightforward enough, but the first thing that strikes me immediately is not at any stage has it told me what the contribution is in this question. This is very similar to what the AAT like to do. You might have to start messing around with formulas, but you might need to find the actual components. The question's telling me, okay, well, my fixed overheads are £60,000. I need to cover that cost, but contribution covers those costs with marginal costing. I don't know what that is. I need to identify that first. So before I do anything, let's figure out what that is. So contribution, just as a nice refresher, is my selling price less all my variable costs. That's important now. It's less my variable costs, not my fixed ones, because I'm going to use the contribution to cover those costs. So based on that information, let's start to pick through the question. So again, I'm going to throw some of these out to the group so you can put your answers in the chat box. So first of all, let's just find out what we're dealing with. What is my selling price based on the information given to me? Look at the information that we've got. That's the first thing we need to establish, don't I? So I've got this formula. Okay, I've got these various costs, and I'm told, okay, we have a selling price of £160. Thank you, everybody. So, okay, let's just put that in. £160. I now need to take off my variable costs. So I have direct materials of 70. We can take that off. direct labour of 40, variable overheads of 10. Now, looking at that, we can very quickly see that that comes to a total of £120 as per the question. So selling price, 160, less all those variable costs, gives me a contribution, as I can see people are starting to put in, £40 per unit. Fantastic. So again, it's very common in questions like this. You will generally have to find the contribution. They don't often tell you. It's not impossible, but again, they just want to get you doing a bit of work beforehand. So with that in mind, I can now do this formula, can't I? So again, let's pitch the question out. Based on what we've just done, what is my break-even point in units? Let's pick literally the formula, fixed costs. £60,000 divided by the unit contribution that we have just established gives me a total of what, please, everybody? Let me throw this out to the group. Can anybody punch that into their calculator and see what we come out with? Excellent. 1,500 units. So my break-even point in units is 1,500 units. What does that tell me? It basically means that, okay, when I'm selling this product, I need to sell 1,500 units of GOR 001 to break even. If I sell less than that, I'm making a loss. If I sell more than that, at that point, I'm making a profit, okay? Brilliant. Now, those of you that have done short-term decision making before, you'll probably be pretty familiar with how these questions tend to work. If we figured out one part, it's more than likely that we will use the information we've just worked out in one question to answer another formula. There's quite a strong interrelationship, isn't there? The break-even point in units that we've just established does come up more and more, okay? So it's saying in part B, let's use the answer above to calculate our margin of safety in units and as a percentage if we sell 2,000 units of GOR 001. Okay, so margin of safety. Again, let's just very quickly recap what that is. The margin of safety, for those of you that just need a quick refresher, is the difference between our targeted sales and our break-even point. So what we're saying is, the clue's in the name, it's almost like a safety net. If I want to sell this amount of units, how much lower can I go in terms of actual sales before I start making a loss? If I wanted to sell 100 units and I only sold 90, okay, well, I've not sold as many as I wanted, but am I making a loss? Probably not. It's the safety net. It's the level in which my sales can drop, but I'm still making a profit. If I go beyond that margin, I'm then making a loss, okay? Now, in units, it's remarkably straightforward. So for units, it's my target sales. And it's worth pointing out that that information will be given to you. For us to identify what the margin is, I need to know what my target sales are, because that is essentially one part of the calculation. Simply take away my break-even point in units. So I'm just going to put BEP to keep it short and sweet. So less my break-even point in units. I can see people putting answers in the chat box already, which is great. I've just said that my sales, or my targeted sales, are 2,000 units. I've just worked out the break-even point in units of 1,500, which means that my margin of safety is 500 units. What that essentially means is I can afford to sell 500 units less than what I want, but I'm still making a profit. If I go beyond that point, if I fail to sell, if my sales drop to 501, I'm making a loss. My margin of safety is 500 units. It's the amount of units my sales can drop below my target before I start making a loss. Working it out in units is straightforward. Working it out as a percentage, it makes it a bit more long-winded, but it's really not that bad, honestly. So the formula that we're going to use for this one is as follows. So I'm going to start by using the margin of safety that I've just worked out, aka the units figure, and when we divide that by my budgeted sales, and then from there, I want to express this as a percentage. So I'm going to times by 100. That's it. So, but again, you can see just how these all connect. I can't do this formula if I don't work out the margin of safety in units. So I've just worked that out as 500 divided by my budgeted sales of 2,000 as per the question, times by 100. I can see people putting answers in, comes to 0.25. We can express that as a percentage, 25%. So that means that within my sort of budgeted sales, I have a 20% margin of safety. Again, my sales can drop 25% lower than what I want before I start making a loss. Okay, excellent. Very nice work, everybody. Last little bit, part C, following on from part B, you can see, as I said, there's a lot of linking going on here, isn't there? If Gordon increases the selling price and all of the costs stay the same, what impact will this have on the break-even point and the margin of safety? So again, before we sort of work through this, we're saying that each of these, the break-even point and the margin of safety, will either increase or decrease. So let's just really reconfirm the information there. I'm saying that I want to increase the selling price, but all of my costs are staying the same, okay? So, again, let me pitch this one out to the group. What do you guys think? Let's start with Let's start with the break-even point. If my selling price goes up, my costs stay the same, what happens to my break-even point, I wonder? So, let's just have a look. Answers coming in. Okay. It looks like people are saying the break-even point is going to decrease. Let's check that, shall we? So people get confused with this, but if I changed the word contribution to profit, you wouldn't hesitate. Contribution is very, very similar. The only difference is we still have to take into account fixed costs at some point. But what we're saying here, my selling price is going up, which means that, okay, I'm making more contribution per unit, aren't I? So my selling price goes up. So, okay, I'm not dealing with profit, I'm dealing with contribution, but the same principle applies. I've got a higher contribution per unit now, which means that if I need to cover fixed costs and I need to hit a break-even point, I need to sell less units. So a really prime example of that is just really obvious. If I had a fixed cost of £10 and my contribution was £1 per unit, I need to sell 10 units, don't I? My break-even point is 10 units. If my selling price goes up and my contribution is now £2 per unit, I only need to sell 5. The higher my contribution is, the less I need to sell to hit my break-even point, aka the quicker I will cover that fixed cost. So my break-even point is going to decrease. Okay, margin of safety. Now, looking at the answers that people put in the chat box, it seems that the general consensus is the margin of safety is going to increase. So again, let's have a quick chat about that. Let's expand on that a little bit. So we've already said the margin of safety is our buffer zone between targeted sales and the break-even point. We've just said the break-even point is going to change, isn't it? So if that is getting bigger, so I've just said that I can cover my costs quicker, so I need to sell less units. So okay, let's just say in the example that I've just sort of spat out of nowhere, we said, okay, my break-even point, I worked it out as 10 units, and my targeted sales are 20 units. Okay, so my margin of safety is obviously the difference between the two. So I've got a margin of safety of 10 units. If all of a sudden we do what I said, actually, I've raised the selling price, my contribution increases, I now only need to sell 5 units to break even. You can very quickly see, can't you, that actually the margin of safety is getting bigger. If I need to sell less, I have more of a margin, okay? So margin of safety is actually going to increase because the break-even point is lower. So we just said, okay, break-even point, that's lower. So the margin is extended. Superb. Now, this next little bit is interesting. So this is where we start to see written elements come in. As you will be all too aware, I'm sure, you are going to be dealing with written tasks of various sizes in this synoptic exam. Some of it will be tie-on. So this is almost like a little supplementary section to what you've just done. But there will also be tasks that we will get to in these sessions eventually that also cover larger overarching themes, okay? So it might be an entire question. But let's have a look at what it's asking here. It's saying, okay, in part D, you've been joined by a new assistant in the finance team, and they have asked you to explain a couple of areas they are unclear about. So it's saying, okay, what is the meaning of contribution? How is it calculated? What is meant, excuse me, by margin of safety? And why is it useful for a business? So it's important that we start to pick out key pieces of information. So what they will generally do in all of these written questions is start a little bit. It sort of puts you in a role. So you can see there it says you have been joined by a new assistant. You work at this company. You are an accounts assistant here, for example. And then alongside that, something will happen. So there'll be almost like an event that, I don't want to say triggers it because it makes it sound very dramatic, but there will be an event that prompts the question. So in this one, okay, the role is you've been joined by a new assistant. The event is they've asked you to explain, and that's the key word there. When we're looking at command verbs, that is essentially, when we use that term, it's what the AAT are asking you to actually do in the question. The biggest mistake people make in these written questions is they write very well. The written skills are top notch, but they don't actually answer the question. The AAT might say, suggest something, and they'll write a fantastic paragraph, but at the end of it, they haven't made a suggestion. So it's essentially irrelevant. The command verb in this instance is explain. So obviously, what do I need to do when I explain? I'm describing something, aren't I? So I need to explain what the meaning of contribution is and how it's calculated. Now, the next thing you need to be wary of is the amount of marks available. This offers 2 marks, one for each, 2 marks, of course, 2 in each question. Don't spend 45 minutes in the exam writing out the meaning of contribution and how it's calculated when it is worth 2 marks. Another thing that sucks people into trouble in these exams is they just get lost in the weeds. Quality and quantity are very different things. You can write a short novel on contribution if you want, or you can just say, this is what contribution is, this is how I calculate it, and you've picked up 2 marks. It's about, again, being efficient with your time. You can break, again, this down into 2 areas. So first of all, what we obviously need is we need to explain, don't we? So it's saying, what is the meaning of contribution? Now, again, the good thing, I suppose, with written questions is there's no hard and fast format that you guys need to adhere to. If I asked everybody here to write how they would describe contribution, everybody's going to do it a little bit different. So the marker isn't looking for a specific sentence or the words in a specific order. As long as you have explained what contribution is clearly in your own terms, you'll pick up the mark. So in short, we can essentially say it's the difference between the selling price and the variable cost, can't we? As we've already touched on. Well, difference between our selling price and variable cost. And essentially, it covers our fixed costs, isn't it? So it covers fixed costs. Now, again, how you go about writing this will be unique to you, the individual. You might say that contribution, explain what it is. Contribution is used under marginal costing to cover fixed costs. This is calculated by showing the difference between the selling price and the variable cost. That's essentially all you need to do. And what you can also do to pick up that last mark is actually show that calculation. So when you're saying it's the selling price less the variable costs, show it as we've just done it. £160 minus the 120. So essentially, you're recycling the information that you've already used. If you're explaining something, showing how it actually works, aka how is it calculated, as the question is saying, you've said it's calculated by doing the selling price less the variable costs. Based on what we have just done, show the reader that. So based on this example, our selling price was £160, our variable costs were 120, our contribution comes to £40 per unit. That's the sort of thing you need to do. You do not need to spend 15 minutes on this question. Get in, you make your points. There's 2 marks available, so there's 2 clear points. The meaning of contribution and the calculation. Do both of those, move on from it. You picked up the 2 marks. Same goes for margin of safety. You can split this into 2 parts. I mean, the good thing is with this, there's 2 marks available, but there's actually 2 questions. Look at the way it's constructed. What is meant by the margin of safety? That's the question. Once it's been calculated, how is it useful for a business? That's another question, isn't it? So based on that, if there's 2 marks available, I would look at that and say, okay, well, I'm going to get a mark for each point. If it's asking 2 questions to get 2 marks, I need to answer both those. Again, quality in your writing. Don't spend an hour writing about the margin of safety and then ignoring the second question because you're not going to get 2 marks, okay? So margin of safety, again, you can just start with a straightforward explanation, can't you? And again, what this might be, as I keep saying, will be unique to you. So you can essentially say, we've already discussed it. It's a safety net, isn't it? Between our target sales and our break-even point. So that's it. You've explained the margin of safety. Again, you will of course do this in your own way, but that's essentially it, isn't it? It's the safety net. It's the difference between our targeted sales and our break-even point. And as I've said, you can put, it's the amount our sales can drop before we incur a loss. It's the margin in which we are safe. How is it useful for a business? So that's an interesting question, isn't it? So it's not saying, okay, calculate it now. It's changing the remit of the question a little bit, isn't it? It's essentially what? I mean, I've pretty much just said it, haven't I? What are we doing? You can show this in different ways. It's not asking for a calculation, but again, this is all one big question. Link it to what you've just done. So you've shown what the break-even point was when you looked at part B. So show that calculation and then just offer context to it. So as I've just said, we can sell 500 units less than targeted. Before we make a loss. Now, again, you will of course write this ever so slightly differently, but the point applies. It's saying, why is it useful for a business? Well, let me show you, because 500 units, that means that we can sell 500 units less than our targeted sales before we start making the loss. That is important information. It's sort of, the questions like this catch people out because you can go overboard. Why is it useful for a business? Well, the reason you use it is why it's useful. The proof's in the pudding. I've very clearly just said, I need to sell 500 units less. That is how much I can afford to lose in sales before I make a loss. That's important information for a company, isn't it? It's really, really important. That's why it's useful. I don't need to offer more than that. I don't need to spend 20 minutes going through all these reasons. The whole point of doing it is why it's useful. I don't need to look for an extra point, okay? So at this point, we're now on part E. So what I'd like to do is, let me pitch this to the group. We can do 1 or 2 things in the remainder of this session. We can look at the last little bit of task 3, which is a refresher on depreciation. or we can look at the written question in task 4 tonight. If not, we are going to be doing that come next week's session. So we will be doing the written work. So like I said, I'm quite happy to work through this. I'm aware of the timings. I know we sort of run for about 30 minutes-ish, but we are going to get through this. Also spend a bit of time doing the written questions as well, okay? So in this one, as I said, advanced bookkeeping, it's depreciation. We're working on the accounts of a business. They aren't back registered. The year end is March X4. We're saying in February, a business purchased a new van costing £12,000, including that. The new van has a residual value of £3,000 and is purchased in cash. We have a depreciation policy of 25% using our diminishing balance method. And it's the company's policy to charge a full year's depreciation in the year of acquisition and none in the year of disposal. So we're not doing pro rata, basically. It says that depreciation has already been calculated for all other motor vehicles and an extract of the trial balance is below. So let's start to have a look at this. Now, again, it looks like there's a lot here, but we'll filter through this information as and when we're going through it, okay? So first of all, it's saying in part I, what is the motor vehicle at cost account when we've taken into account the new acquisition? Now, to do this, I'm picking a variety of elements. As we can see, I've already got amounts in there of £60,000. So there's other assets, there's some other motor vehicles. But the question I'm asking is, okay, at the end of this year, have I purchased any more? Well, actually, come to mention it, yeah, I did. I purchased a new van for £12,000. So all I need to do here is when I come to post the relevant debits and credits, I'm not doing them in this question, but those debits and credits would still be happening behind the scenes. I've already got an opening balance of £60,000. I've got a new acquisition of 12,000. So at the end of all this, the motor vehicles account would have a balance on there of 72,000, wouldn't it? So I'm just literally taking the opening balance, adding on the new acquisition. Next one is saying depreciation charge for the year. So again, let's just pick out the information. I've already got a depreciation charge of 7,500 here, okay? So some depreciation has already been recorded. So we need to take that into account. But I also need to take into account the depreciation on the new asset. I've just said I bought this van for £12,000. And I'm also told, okay, how am I going to deal with it? 25% using the diminishing balance method. And it's a company policy to charge a full year's depreciation in the year of acquisition and none in the year of disposal. So the capitalized amount we've already established. It's £12,000. Now, you will know what it says, hang on a minute, it's £12,000 including that. But we've already said, as we read the question out, the business isn't VAT registered. Don't get tripped up on that. This is one of those little tiny rules of advanced bookkeeping that you can easily forget if you haven't sat it in a while. If you are not VAT registered, you can capitalize the VAT element of this acquisition. If the company was VAT registered, we'd have to work out the net amount. We wouldn't be able to capitalize the VAT. We can in this instance because the company is not registered, okay? So I've worked out, okay, I've got £12,000. I've got a depreciation policy of 25% using the diminishing balance method. Next little thing to watch out for, check the method we're using. The question is saying to me that there is a residual value of £3,000. However, track back, when you come to work out depreciation, if you're using the diminishing balance method, we don't use the residual value, do we? Oh, excuse me, it's my pen having a funky moment. If I was using the straight line basis or the units of output, then I would take into account the residual value. I don't do that with the diminishing balance. The question is trying to catch you out by putting it in there. I don't need it here. I'm simply going to do capitalized amount times by a percentage. That is it, okay? So I've already got £7,500. So let's now work out the additional fee. So I've got £12,000 for the new asset. And again, because I'm using diminishing balance, all I'm going to do is times by 25%. So 25% of £12,000 gives me a total of 3,000. So the charge on the new van is £3,000. So add, that's the figure that I've already got. Gives me a total of 10,500. So the overall charge for the year on all my assets has come to £10,500, okay? Next question, saying carrying value of the motor vehicles. I'm going to change that to 1/4 because this question has been altered in the notes, so I'll keep it all nice and uniform. So it's saying the carrying value of the motor vehicles at this point. Now, as a refresher, the carrying amount or the net book value is your original costs less all the depreciation up until that point, okay? Now, this one really isn't that bad. We've just worked out in part one, okay, my total value is £72,000. I now need to take off depreciation. So my accumulated depreciation, I've got two figures, haven't I? 37,500, and then the 10,500 that I've just worked out. Now, I'll be honest, I think this question crosses its wires a little bit, because you can say, well, hang on a minute. Well, if that 7,500 is recorded there, is that not included in this amount? The way this question is constructed, not particularly clear, I must admit. But all we're going to do is say, okay, let's take away what we already knew was there, 37,500. Let's now take away the charge for the year, 10,500. Give me a total £24,000. The carrying value of the motor vehicles at the end of the year comes to 24,000. Okay, last little bit, and then we're going to do some written work, everybody. It's saying that if the company policy was actually to pro-rata the depreciation, so we're just changing the scenario a bit, based on the amount of time the van was owned. I mean, again, it says that, but that's what pro-rata means, doesn't it? As opposed to depreciating in a full amount in the first year, how would this impact profit? So, in terms of pro-rata, now again, you should be familiar with doing this at this stage. I'll be completely honest with you. But let's just see if we can identify how it impacts profit. So first of all, we need to work out what it would be. So we changed and flipped the script a little bit here. I now need to pro-rata. So when did I buy this van? It says that on the 1st of February, I purchased it. My year end is the end of March. This is just one of those things you need to watch out for. February to March, the 1st of Feb, the 31st of March, equals 2 months. This is where the dates are really, really important. I cannot stress this enough. Check the dates of the month. If it was saying, actually, I purchased it on the 28th of Feb, as opposed to the 1st, it would only be 1 month. You can see how this really, really easily trips people up. If I bought it on the 28th of February, I haven't owned it in the month of February, have I? So again, they will give you these dates. It will either be the start or the end of a month, okay? So in this question, it's saying I bought it on the 1st of February, but do keep that in mind. Very easy mistake to make. It will completely throw you off in this question. Okay, so I now need to prorata. So I already know what the full depreciation charge would be of £3,000. I'm going to divide it by 12 months and then times by the amount I want to prorata by, which in this question I've just worked out is 2 months. Gives me a total £500. Finally, all I need to do is compare them. So if I've got a £500 charge, it's pretty obvious, isn't it, that actually it's less, isn't it? but it's £2,500 less than charging for a full year. Because we've just said it would be 3,000 if we get a full year, a full charge in the year of acquisition and none in the year of disposal. If I was doing pro rata, the charge would be less. It'd be £2,500 less in this instance. So depreciation is an expense. If my expenses are now less, that would increase my profit, wouldn't it? My profit would actually be better. So it would increase my profit by £2,500 because my expenses are decreasing. Now, at this point, people say, well, why would a company not choose to do that then? I mean, it's obvious, isn't it? I'm going to pro rata it because I'm getting more profit. But what you got to remember is this all does eventually come full circle. If I go back to the original question, it says none in the year of disposal. So whenever I get rid of this asset, finally, in that last year, I'm not going to charge any depreciation. If I'm doing it pro rata, I will still have to charge for the amount of months that I owned it in the year I got rid of it. So it does eventually balance itself out, okay? So we're going to have a look at task 4. Now, we aren't going to finish this tonight, but where we wrap up tonight, we will then re-pick it up on next Thursday's session, because I think this is an important one. So this is your first real taste of a larger written question, okay? Now, this is often the area that really does catch people out. But like I said, once you break these written questions down, it's really not as terrible as people make out, okay? So let's have a look. We're saying that we work for Devilish & Co. in their finance department. Now, again, can you see how very quickly, before we even go any further, as I mentioned, we're given a role. So again, you're doing a bit of role play, essentially. You've recently been completing some work with Maria, an external consultant. She's a professional accountant regulated by the AAT. One of her clients has asked her to hold money on their behalf. Again, we have a role. We have an event. Something's happened, hasn't it? Somebody's asked Maria to hold on to money. She then asks you for advice on the matter. It's saying that we should complete the email below in response to the questions raised. So it's saying, what are the potential consequences of non-compliance with the rules for handling clients' monies? Sounds really fancy. Don't worry about it. We'll break it down. In what situations can you not hold money on behalf of a client? So let's start to break this down. When it says, what are the potential consequences? Let's just start to see what we need to write about. So I need to write about the consequences of non-compliance for handling money. That basically means, what does that mean? Non-compliance. I'm not following the rules, okay? That's all it means. When it says non-compliant, it simply means that I'm not following the. You could just rephrase this yourself. What are the consequences of not following the rules in regards to handling money for clients? Sounds a lot more straightforward, doesn't it? What a waffle. And the next one, okay, situations I can't hold money on behalf of a client. So we know the sort of angle we need to take here. So as is appropriate. I think my Zoom just had a bit of a senior moment there. Let me just get my screen back up for everybody. Okay, can I just double check? Should be able to, can everybody still see the screen? Okay, everything just froze for a second then. My Zoom seemed to just shut off and back on. Yeah. Okay, thanks for your patience there, everybody. I'm not entirely sure what happened. Okay, so for the subject, now, again, if you are asked to put in a subject, it doesn't need to be anything specific. It just needs to be just relating to the question as is needed. So I'm just going to put as appropriate because it really doesn't matter. And it's very specific to the actual question that you're focusing on. Okay, so in this one, your header could be handling clients' monies. It could be consequences. It could be, again, something very specific, but just as long as it is appropriate to the point at hand. Now, the bigger part of what we're focusing on here is, okay, the consequences of non-compliance. There's 4 marks available here, so it stands to reason I'm going to need 3 or 4 points. Okay, this is one of those, again, where it's about the quality and the consistency in your writing that really does make a difference. Don't write a massive paragraph about a consequence. You need to show the marker more. 3 or 4 clear points will get you more marks than writing about 1 consequence, because it's the question saying, isn't it? Consequences. Don't just write about 1. The question is telling you, I need to see more here. So again, I'm not going to go word for word because everybody will do this a little bit differently. It's always good to start, however, just with a quick intro. And you can very well pick up a mark for this. It doesn't need to be anything crazy. It doesn't need to be anything over, just a quick one. So it can be anything, regarding your query about handling clients' money. Here are some consequences. It could be something pretty straightforward, but don't underestimate the value of a short and sweet introduction. This runs through to level 4 as well. I will point that out. I still mark level 4 mocks, and I say to people, put a little introduction in. If you're doing like variance analysis or something, put an introduction in there. You will pick up a mark or 2 for it. Exact same goes here. Just, again, it's an email, be polite. In terms of the actual consequences, again, you should be aiming for about 3 or 4. Now, in terms of what these are, again, there isn't an exhaustive list. You don't have to do it in a specific order. You might have a consequence that when you come to look at model answers isn't on there, but if it's still technically correct, the marker would be very much obliged to still give you a mark for it. You can essentially sort of split this into sort of different rings, can't you? So what would not following the rules be? What would the consequences of that be? Now, one of the big ones would be sort of legal action, wouldn't it? So prosecution. So this could be, money laundering, fraud, theft. If you've been found guilty of non-compliance due to these actions, that would result in legal proceedings, wouldn't it? You could very much face a fine or go to prison. There's also the other side of it, which is still in ethical actions, but is it something that is going to sort of get you immediately locked up? It could be professional issues. So your professional status, for example. Obviously, we as AAT members, and that of course extends to you guys as student members, you have a code of conduct, you have the fundamental principles that you need to adhere to. If you do not abide by these, you could be excluded from the AAT, you could be permanently banned from the AAT, and it doesn't need to just be AAT related. Again, if you're found guilty of something or do something unethical, you could be blacklisted, not allowed to work in practices anymore. So it's just different areas that you can go into with it. And then for the next little bit, in what situations can you not hold money on behalf of a client? Now, there's 2 marks available for this. Now, you've done an introduction, you don't need to do another one. That is perhaps something that we need to point out, okay? There's 2 marks here. So again, look what the question's saying. In what situations? It's asking for more than 1. These are the sort of the subtleties in the question that you need to pick up on. It's in your face, but it doesn't stand out as gloomily obvious, doesn't it? But look at what it's saying. Situations. It needs more than 1 example. If you give 1, you are not getting both marks available here. Okay. So again, you could just put, in terms of situations where you can't hold money for a client. And again, the common 2, let's have a look. You could say, okay, if we have investment funds, so investment money involved, that's a big no-no. For us as accountants, we won't hold that money on behalf of a client if it's relating to money for investments or subsequent investments, future investments. We generally won't get involved in that. And then, of course, a pretty obvious one is if we have suspicion. Probably going to spell it wrong now, aren't I? Let's change that. I'm going to make make a fool of myself. So we can suspect that the money has come from illegitimate gains. I put suspected. I'm an accountant, not an English teacher. So what we're saying there is, if we believe the money has come from illegitimate gains, illegal activities, what could they mean? Doesn't really matter, does it? It might be money laundering, fraud, theft. Doesn't matter what it is. If we have suspicion that this money is illegitimate or not, not legal, we won't hold it on behalf of the client, will we? Okay, so we have overrun a little bit, so we're going to wrap the session up there, everybody, but we will be picking up the rest of this written question when we get to next week. So I'm just going to very quickly press stop recording.